Rick, take it away.
Absolutely. Let's start out with PPI, then we'll go to retail sales. February PPI headline number expected to be up 0.3%. Zoom, 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 up double, up 0.6%. That would be the hottest going back to, well, equals July of last year. To find a higher number, you're going back to June of 22 when it was up 0.9%. You strip out you strip out food and energy, it's up 0.3, 1/10 hotter. But in the rearview mirror, we had up 0.5%. You strip out food, energy, and trade, it's up 0.4. It's up 0.4. That would be the hottest, obviously, since it was up 0.6 last month, year over year now. Okay, these are final demand headline numbers. Expected to be up 1.2, up 1.6, up 1.6 on year over year. And that is, wow, we're going to have to go back a ways. 1.6 would be the highest level going back to September of last year when it was 1.8. Now, the year over year, ex food and energy, up 2%, equaling the rear view mirror, but definitely a bit hotter than we were expecting. So ex food, energy, and trade year over year, up 2.8. That follows up 2.6. To find a higher number than 2.8, you're going to have to go back to September of last year when it was 2.9. All these are warmer. Yields are going up. Now, let's switch gears, shall we? Let's go to retail sales. And remember, every one of these metrics was the weakest since March of 23 in terms of month-over-month change. So now, are we going to reverse it? We certainly did. Up 0.6. However, that's still less than we were looking for. And that 0.8 that was the worst since March of last year now becomes minus 1.1. And if you strip out autos, it improves. It does not improve. And this really is interesting because when you strip out autos and it doesn't improve, that really gives us some sense of what's going on in many of the other industries. It's up 0.3, 0.2 shy of expectations. And last month's worst since March of 23 becomes worse again from minus 0.6 to minus 0.8. Strip out autos and gas, up 0.3. Finally, this is our first number that equals expectations. Following down 0.5, 0.5%, that now becomes down 0.8. And finally, if we look at the control group, it's unchanged. We're expecting up 0.4. Last month, minus 0.4 becomes minus 0.3. The only thing we have left is initial and continuing claims. And I just dropped the papers. Hold on. Let's bend down. Let's grab them. Here we are. We're back in frame. Initial claims, 209,000. 209,000 would be the smallest since Feb of 24, which, of course, is this year, not that long ago. And if we look at continuing claims, this is a biggie, 1,811,000. We really need to pay attention to this number. That's really an outlier, especially considering we're looking for our second number in a row to be up over 1.9 million as it was last week. And that was the highest since the third week of 23 in November. Now, here's what's fascinating. Not only is this significantly lower, there's a revision of last month that's unbelievably large, from 1,906,000 to 1,794,000. Huge revision. How far back do we have to go to see 1,794,000? That's going back to October of last year. So these numbers are really a bit odd. On the claims side, that's showing a labor market that's super tight, but I question continuing claims accuracy. On retail sales, well, a bit of a disappointment on many levels, especially on the revisions. And on PPI, you know, I want the experts to weigh in, and I hope they're not going to sound like CPI, where they're just going to push this back a bit. Hotter than expected, no matter how you slice it. We're now up to 421.5, 422 in tens. Tens prior to the number, we're at 420. But keep in mind, we were flirting with 406, 407, 408 not that long ago on an intraday trading basis. And the pre-opening equities, they're still dealing with this in a positive fashion, which is very interesting, considering the numbers. Sorry, there's a lot there. Becky,
that's what I was going to ask you about, Rick, is I'm surprised. Look, we were looking at the Dow futures up 165. As soon as the hotter-than-expected PPI came out, you saw that drop down to 120 or something, and it's picked back up. This seems like a shockingly, surprisingly positive reaction from the equities front. Yields aren't that much hotter. Watching what happened afterwards, are you surprised by any of that?
Yeah, I'm very, very, very surprised about what's going on in equities. I can't wait to see how the panel weighs in. And it's a very similar dynamic to CPI the day before yesterday. It seems as though investors are kind of brain melding with the Fed, and they continue to see easing in 2024. We could question what meeting. Is it going to be June? Is it going to be July? Is it going to be September? But they're still zeroed in on the Fed moving. And they don't look at PPI as intensely as CPI, so I don't think the reaction should be that surprising. But it continues to amaze me that equities are so convinced that the rate of inflation is not going to be a huge mogul for some of these Fed eases, especially off all these articles. I'm sure everybody read the Wall Street Journal article today. Yeah. People are a bit freaked out. They want deflation. They want prices to actually go down instead of going up slower. And believe me, the Fed, the last thing they want is deflation. The last thing a country with $34 trillion in debt wants is deflation.